Welcome to A Canadian Investing in the U.S., a podcast and YouTube channel focused on Canadians buying real estate with host Glen Sutherland.
Welcome to a new episode of A Canadian Investing in the U.S. This is your host, Glen Sutherland. With me today is Ali Rostamee. Ali, you want to start off by giving everybody a bit of an introduction to yourself, maybe some of your story?
Absolutely. So I moved to Canada in 2010. I moved to Vancouver, and shortly after a short period of time, I realized that the income to expense ratio is something in Vancouver that I don't want. So I moved to Alberta. I started working in oil and gas industry in a drilling department in oil patch. Alberta oil patch, and then I read Rich Dad Poor Dad.
Okay.
Before I moved to Canada. So I always had that mindset of cash flow quadrant and all that Robert Kiyosaki good stuff in my mind.
Yeah.
So I wanted to be financially free. So when I moved to Alberta, I was like, okay, I need back then I needed $5,000 to be financially free. And I realized that if I buy a duplex and rent out both units in Edmonton, each will give me $1,000 positive cash flow. So I was like, okay, simple. I need 5 duplexes and I can retire.
Yeah.
That was the original plan, but it didn't go by the plan. So after my third house, the bank said, you're not lendable anymore. I didn't know anything about the debt to income ratio or anything like that back then, but I reached that ratio, and so the bank told me, sorry. So I was like, okay, what I can do? So I started educating myself in the real estate investing world. And back then, it was only one podcast in the entire world, real estate investing podcast, and it was BiggerPockets.
Okay.
And it was an American podcast, so it was like a little bit different with the Canadian investing. But I started listening to.
So this is a little ways back then when you're talking about this. What's the?
Yeah.
Do you happen to know the year?
I'm talking about 2013, 2014.
Okay, yeah.
Yeah.
Okay.
Yeah.
Sorry. Continue.
Yeah. No problem. So yeah, and then I was like, okay, now I know what the BRRRR is, what the debt to income ratio is, and the multifamily can be triplex, can be fourplex. It doesn't need to be duplex.
Yeah.
So and one thing I realized, I just want to talk with your audience, is you cannot get rich by cash flow only. To me, the best strategy in real estate is to start in the appreciation market and get your money appreciated in that market, and then put that money to a cash flow market. I think it's faster. So I realized that, okay, I have to do that. So back then, Alberta was in a recession. So from 2015 to 2022, when I was in Alberta, it was recession. Oil field was like 80% of my coworkers got laid off. So I moved to Toronto. I bought a place. I got lucky. It was before COVID. I bought it right before COVID, and I started doing flipping in Toronto. And I did a couple flips, and I got lucky during COVID. I made a lot of money. So I put that money in Hamilton, a multifamily, and not in duplex, in triplex and fourplexes.
Okay.
And then so I got to financial freedom by that.
So
and then
you
I
have to sell the
I'm-
other properties
yeah.
in order to do that? Because you said before you had a 3 property max, right?
Yes. I sold one property in Edmonton, and then I brought the money to Toronto. And I started flipping in Toronto and doing BRRRR. So flip and BRRRR in Ontario, and then duplex multifamily long-term hold in Edmonton. Edmonton is the cash flow city. I call it the cash flow city in Canada. I think the best place to invest in Canada if people are looking for the best tenant landlord rules and the best cash flow. But Ontario is good in terms of cash flow, like in terms of appreciation. And Hamilton, I think, is a sweet spot to get both. A little bit of cash flow for the fourplexes, and then you get the appreciation because people from Toronto move into Hamilton, and then the prices are going up.
Okay.
And then I moved to the US. So if you want, I can tell you about that.
Yeah, no, let's talk about it. But it sounds like things were going really well. So why go to the US? Why not just continue with doing Hamilton? Are you looking to invest in the US? Are you looking for a coaching program that will actually save you money and help you avoid mistakes? My students get discounts on lawyers, attorneys. If you're looking to get an E2 visa, if you're looking for certain software, if you're looking to even speak with CPAs, I have discounts for all these things. If you want to just get on a quick phone call and we can discuss if it's a fit for you, 10-minute phone call, go to glensutherland.com or at CanadianInvestingInTheUSA.com and book a call.
Exactly, Pat. That's a great question. I think it's 3 reasons. If it's more than that, I'll tell you. But
Okay.
3 reasons in my mind at the moment. So first of all, we have a product in the US. It's called DSCR loan.
Yeah.
And any piece of property in the United States, as long as the rent is more than the mortgage and your insurance and stuff, you can qualify to get the DSCR loan. In Canada, if you want to get the asset-based lending, they call it asset-based lending or commercial loan, pretty much. The property has to be 5-unit plus. So for single family, duplex, triplex, fourplex, you cannot get the asset-based lending. That's a reason number 1. Reason number 2 is cheaper. The price, is way cheaper. Like from Toronto, you drive 4 hours to Cleveland, or 4 hours to Detroit, Michigan. The price, the value is like 20%. And yeah, so that's number 2. And number 3 is information. So any piece of property in the United States, it's a freedom of information, whatever it is. You can get any information on any property you want, like how much is the mortgage, how are they behind on the mortgage, anything. But here in Canada, you cannot get nothing, pretty much. So that's the freedom of information. That's another thing I like about and the US dollar, obviously, and the US economy is better than Canada. All that stuff, that made me move. One thing I want to mention, it's a very important number every Canadian has to pay attention to is GPT per capita. Sorry, GP. What do you call it? The GDP.
Product?
Yeah, exactly. Per capita. So there's a famous graph. I don't know if people see it. Back in the day, Canada and US, they're starting together. And then when Trudeau came to power, so those lines started getting separated from each other. And right now that we are talking in 2025, is 40% different. That means each Canadian in average is 40% poorer than every American. That's a sad news for Canadian, but yeah, that's the reality.
So for people that are like, can you elaborate on that? On
GDP
on the 40%
capita
difference? Yeah.
Yeah. So there's a graph. Is a famous graph. If you Google, So you see the graph. So that means this is the average.
Yeah.
Average Canadian. That's a GDP per capita. So if you divide the GDP, the entire GDP, divided by the population of each country, you get to a number. And for Canada and the US, that number was the same. Like 15 years ago was exactly the same. That means every Canadian and every US citizen was the same wealthy. But now they are 40% richer than each Canadian.
Okay.
That's And another thing I wanted to mention, I remember, I know one more reason I wanted to invest in the US is everything is easier. Let's say for permit. Any permit, I want to get a permit in Hamilton. Like Alberta is the best place to get permit, but still, like you're talking about like minimum few weeks to get any permit.
Yeah.
I was in Phoenix, Arizona, like a few months ago, and I was talking to some people. It was a boots on the ground for the strategy. If you have time, we can talk about it. It's called co-living. That's my favorite strategy right now. So we went to Phoenix, and then the guy was like, "Yeah, we have to get a permit." And I asked him how long it takes for you guys to get the permit in Phoenix. He said it's a same day permit. And I was like, "What do you mean?" He said, "Yeah, you go to the city hall with your request, and you come out with the permit." And my mind blows. Like you get the permit at the same day, and they're like, "Yeah." I was like, in Hamilton, sometimes you have to wait like 6 months. Last a couple of years ago, it was the city of Hamilton. It was a cyber attack. So any permit you want to get, it was at least like 6 months, 8 months, sometimes a year, just to get a permit for the basement renovation, something simple like that. So man, like everything is easier
That's awesome.
south of the border.
I want to go back to something you said at the start that I wrote down on my pad here. You said when you're starting off, you recommend to go into an appreciation market, and then once you've made some money, to move into a cash flow market. If somebody
Mhm.
was starting off right now, what markets would you recommend them to start with in order to get into
In the
the
US or in
US or
Canada?
Canada, wherever you're thinking?
Oh,
Are you looking to buy property in the United States, but not interested to travel there just to sign the notary? Did you know there is 6 different ways to sign notary as a Canadian, and only 2 of them involve going to the United States? To get my free guide on notary, go to acanadianinvestingintheusa.com/notary.
in the let's talk some for the US, because right now I'm in the US, and
Well,
I'm
it's also a
investing
podcast about investing in the US.
investing in US. Yeah. So the market I like for my fellow Canadians, usually people in Ontario. Let's talk about Ontario because the majority of the population are in Ontario. I recommend Cleveland. I went to Cleveland a couple times. So Cleveland is exactly like Hamilton. When I was in Cleveland, I was like, this is the US Hamilton. Exactly. Same concept, same lake. It was a steel town. So, and then you can get these old properties, you can renovate them, you can do full BRRRR in Cleveland right now. And the cash flow is great. There's a couple of hospitals in there. So I recommend Cleveland. The price is low.
Are
The
you
price,
seeing appreciation in Cleveland? Because I typically, when you were talking cash flow markets, that's more what I was thinking of Cleveland as a cash flow market more than an
yes.
appreciation market.
Yes, cash flow market. Yeah, I'm talking about cash flow. Sorry.
Okay.
And then in terms of appreciation, I recommend Charlotte, North Carolina. That's where I want to invest. Yeah, Charlotte, North Carolina. I have my cousins and family lives in North Carolina, in Charlotte. So we bought a house together. I bought a single family in Edmonton, and he bought a duplex in Edmonton. He bought a single family in Charlotte. So my property appreciate from 400,000 to 450,000. His property appreciated from 150,000 to 500,000. And if you consider the US to Canada ratio, like the exchange rate, is even more. So like, not even close. Yeah.
And what time frame was that? Because if some people might if they're Ontario or Toronto investors, or even any Ontario investor, they might be like, hey, right after COVID, we all doubled our prices of our property.
Yeah.
So was it in that kind of time frame, or when was
it was 2013, 2015 we bought our properties, and then 2015 till now.
Okay.
Let's say 10 years. Yeah.
10 years. Okay.
Yeah,
Right.
It's like
and do you think is he still experiencing appreciation on his property in North Carolina still?
Yeah. Charlotte, North Carolina, and I like Phoenix, Arizona as well. So Phoenix, Cleveland, and Charlotte is my 3 cities that I'm looking to invest. I started already in Cleveland, and then I wanna diversify into Charlotte and Phoenix. One thing I wanted to mention here, like real estate investing is same as a stock market. You have to diversify. It's not. I know personally. I know someone has 1,000 units in Hamilton, Ontario. 1,000 units only in Hamilton. He doesn't invest in anywhere else. And every time I talk to them about that, he said, "Oh, this is my backyard. I know everybody. I have my team here." He's doing really well. He's a multimillionaire right now. I'm not saying something is wrong about it, but I like to diversify. In Canada, I diversify between Edmonton. I still have properties in Edmonton, and Hamilton. So Edmonton, Hamilton, totally separate, markets. And in the US, if I wanted to diversify, it would be Charlotte and Cleveland, or maybe Cleveland or Phoenix.
Okay. Yeah, no, that's awesome. But the other side of the coin, I had a guest, maybe I won't do the name drop, but I had a guest on my podcast in, I think, like the first 10 or 15 episodes. So it was like 2017 when we first started the show.
Yeah.
And
I
after we
remember.
recorded the podcast, we sat there and we were just, chit-chatting about whatever, and I was telling him about all my my properties that I had. Back then it was like Indianapolis and Alabama and over in Missouri, and I was just sort of chatting about it, and there was only a couple properties at that time in each city. And he said, hey, you know what, it's good to diversify, but if you want to be popular or get advantages from your property management, sometimes you get discounted codes. He was recommending trying to get up to 5 properties or 10 properties in each market, just so that you just have more pull with the realtors too, and you do that. But I do believe in the diversification myself. Like, I work in 9 different markets. It also gives you different flexibility when your like market changes happen. One goes down, you're like, hey, I'm renting, I'm not selling right now. The other one's going up, you're like, hey, this is if we need some cash, we need some, like, we want to go buy a large multifamily, we need to get some money, let's just go sell one that's up, right? And there's always ones that are up, there's always ones that are down, there's always, and so you have you can just take the different markets, and even like you were talking about, like appreciation markets and cash flow markets. So even you can take advantage of different strategies because they were going to work in different markets. You can see like flipping might work in some markets. The cash flow works in another market. Some markets have like a ton of stuff owned by the bank, and you can just pick up bank properties. Some of them, there's like the auctions are done online, so they're a lot easier. So you just start picking different markets. You get different advantages. Some places it's really popular to do seller finance or contract for deed, and you can like, hey, if that's the strategy you want to do, be in the right market. Sometimes if you're trying to, I like to say, put a square peg in a round hole, it'll fit if you shove it in, but sometimes you're just going to be battling uphill.
Absolutely, that's correct. And one thing is, sorry.
Okay, I can see it.
You see me? Yeah. Okay. One thing is, in terms of like, I'm the living proof. So my property is in that, like, couple years from now. So from 2023, 2025. So my properties in Hamilton depreciated. My properties in Alberta appreciated. So they're balancing each other. And people in Toronto, they bought a condo and stuff. All my friends and families. So they're like, oh, our properties we're all down the water and stuff. I was like, yeah, because like I know what happened, especially in a condo market in Toronto. But but my properties in Edmonton, they're just going up. So, and then before that, it was vice versa. So I had like few years of my property, like more than that. Alberta was in recession, so properties in Toronto, Vancouver was appreciating, and Alberta was appreciating. So they're kind of like balancing each other out. That's what I'm saying. Like, these are the best diversification if you want to do it in Canada, within Canada, but outside Canada, it's a different story.
Awesome. Yeah. I want to ask you one more question before I let you go. When you were moving from Canada to the US, what challenges or what things did you find difficult? Because you just talked about all the positive items. Was there anything you found that was more difficult, or things you had to figure out?
Oh, a lot of things, man. So first of all, every time I wanted to, this is the first time I'm coming to Canada, like with my paperwork, with my American paperwork. But every time I wanted to come to the US, because I'm from Iran. So they started, like, since a few years ago, they started asking me weird questions. Like, one time they mistaken me with a nuclear scientist or someone. So they kept me at the border for like few hours asking questions. It was like bad. And then that was one challenge for me as an Iranian, like Iranian Canadian. The US doesn't have a good relation with Canada right now, kind of, and then not a good relation with Iran. So I'm an Iranian Canadian, so I'm like, I'm the worst. One thing was at the border, and then the second thing was like moving money from with this exchange rate and stuff. And because I'm managing all my own properties long distance. So managing properties from long distance was another challenge for me. But other than that, everything, yeah. And then my Canadian driver's license, like you don't have a social security number in the US, you cannot do anything. So I was driving with my Ontario license plate since I moved to the US, and with my Canadian driver's license, I couldn't open a bank account. I couldn't even get a phone number, cell phone number. I had to go to Google Fi and find get a phone number. So kind of challenges like that. Yeah.
Yeah, that's awesome. I didn't realize you were living in the States now too. We'll have to do another podcast.
Yeah.
On
I
that
live in
whole
the States.
transition.
Yeah, exactly. Yeah, I live in Washington D.C. For a few reasons, because I have some family friends, first of all, in Washington D.C., and then it's kind of in between. So from Washington D.C. is 7 hours drive, is 7 to 8 hours drive to Cleveland, 7-8 hours drive to Hamilton, 7-8 hours drive to Charlotte. So I'm kind of to be in the center. Yeah.
That's awesome. All right. Before I let you go, if people wanted to get a hold of you, how do they find you?
Yeah, you can go on Instagram. Actually, I'm findable on Instagram. It's Ali Rostamee, but Rostamee is with double E. So Ali, my first name, and Rostamee, ROSTAMEE, and they'll find me.
Awesome. Well, thank you for coming on the show. Lots of stuff in there. That was a good one. I really appreciate your time.
Awesome. I'm glad. And I appreciate your time as well, Glenn.
That was a nice video. Bye.